Dollar yen remains a focal point with its ongoing battle to maintain its uptrend. Euro pound is another interesting pair as traders weigh the impact from economic data and geopolitical risks on both the euro and the British pound. And don't forget about oil prices. Oil prices keep lacking direction despite the latest escalation in tensions between Russia and Ukraine. So these assets will definitely be worth monitoring in the coming sessions, and at this video I'll try to explain what to expect moving forward. So starting first with dollar yen, we can see that dollar yen switched back to losses today after failing to close above 155.40 yesterday. The price is now slightly below this steep bullish channel over here. It has put this channel at risk, but then that decline may not be very concerning unless the price, unless this decline extends below the 153 and 153.55 region. I believe this territory could be more important because the 20-day exponential moving average and the lower band of this lower bullish channel are located here. So a decisive close below this floor could upset traders, likely activating stronger selling pressures towards the 50-day exponential moving average at 151.32. Slightly below that, the 50% Fibonacci mark of this downtrend is at 151.75, while not far below that, the 200-day exponential moving average could also attract attention, currently at 150.25. So another failure to halt above these lines could cause more losses, likely a steeper decline towards the 38.2% Fibonacci of 148.11. Now looking at the technical indicators, well, the indicators provide little direction. The RSI continues to move sideways despite today's negative slope. The stochastic oscillator has posted a positive crossover here, but then it keeps sloping downwards. So there is the indicators are not providing clear signals. So perhaps the pair should close back above 155.40 to boost buying appetite towards the 157.70 region and back to the upper band of this shorter term bullish channel, a break of which could then likely see a test near 158.35 before meeting the 159.35 constraining zone. And then if that proves easy to pierce through, I believe that the rally could expand towards the upper band of this steep bullish channel currently seen at 160.50. Now looking at Euro Pound, well, Euro Pound is not in great shape. Basically, it has been moving sideways, facing a little positive momentum. It's still below its 50 and 20-day simple moving averages, which increases the odds for more downside, especially as the technical indicators down here continue to point to the downside and are all located within the bearish region. So the odds for a downside correction is higher than for an upside one, and that makes interesting to see whether the pair will reach again this strong support line at 0.8260. The 0.8250 region could be also closely watched as the price posted a 2.5-year low around this level earlier this month. So if we fail to hold here, then there might be a steeper decline towards the 0.82 level, which was last seen 8 years ago. So another failure here could then probably bring more sellers into the market, triggering a faster decline, a more serious one, to 0.8115. Now, if you look to the upside, well, if you look for resistance levels, the 23.6% Fibonacci tracement of this downfall over here could block the way up to 0.80 through 80 and 0.84. This is where the 38.2% Fibonacci mark is located, a break of which could take us up to the 50% Fibonacci of 4.8440. The 200-day moving average is also approaching this level, so a successful move higher could finally see a test around the upper band of this bearish channel, which coincides with the 61.8% Fibonacci of 4.84 84.84. So for a clear bullish trend reversal, I would like to see a decisive, sustainable rally above this number over here. And finally, looking at oil prices, well, oil prices have been quite stable despite the latest increased geopolitical tensions, but we can see a slight positive move today. The price is trying to enter the 70 territory, but it's still below the 50-day moving average at 70.32. Overall, there are a lot of obstacles on the upside which we need to overcome before we officially call for a bullish trend reversal. The 38.2% Fibonacci retracement of this downfall over here at 72 could come next into view. We saw that area acting as strong resistance during the previous sessions, so a successful move higher could boost positive momentum towards the next Fibonacci level of 74.15. The 74.90 region has been also constraining upside movements in the past. So, and it also coincides with this tentative resistance line over here. So another positive move here could confirm additional gains, likely driving us towards the 200-day moving average at 76.40. And then for a clear bullish trend reversal, I would also like to see a move above above October's high near 77.70. This is where this longer term resistance line coming from September 2023 is placed. So any additional gains from here may attract greater attention. Now, if we look at the technical indicators, there's barely any sign that there are barely any clear bullish signals. So there is still uncertainty about whether this rebound will continue higher. If the price falls below the 23.6% Fibonacci of 69.10, then I expect a continuation towards the 65.50 region, which has been a strong support territory, keeping the price within this sideways move. Failure to hold here could then probably visit September's low of 64.60 and perhaps pause near the 64 psychological level before testing this tentative support line coming from December 2023, currently seen at 63.40. Failure to pivot here could probably drives us down to 62, and then another failure to rebound in around this psychological mark could cause a steeper decline, probably towards the 58.20 region, where another tentative steeper descending line is located. So that's everything I wanted to share with you guys. I hope you liked my video. If you liked it, please subscribe to this channel. I will be again here next week for more technical analysis. Thank you for watching and see you next time. Bye bye for now.